Hey guys, welcome back. In today's video, we are talking about the time until $17 for AMC, jumping to number one, exposed for over $550 billion, and many more in this video. First, we're taking a look at this. Crazy how they've gotten away with this crime for so many years. How much longer? So when we take a look at this is something we always show on this channel. It's essentially seeing the undervaluation of AMC. You can see for here, the AMC intrinsic value is at 1677 USD. And right now we are at a market price of 397 or of course 395. Now, the important thing about this is essentially understanding that the value that they give for AMC here isn't even considering all the other factors that should be involved, such as the naked short, such as the amount of synthetics they've obviously created in the past, but also the factor that when AMC sees its true value and when people are actually trading at its true value, the bullish sentiment that will obviously factor in then as well. You know, there are so many more factors, but even then we can see that we are undervalued by 76%. Now, there's of course many reasons for why we know we are undervalued, and in my opinion, I still think that we should be even higher than this because of all the fundamentals that we've talked about, because of everything that's lined up for 2025. Like we talked about, the box office recovering is obviously good for AMC, not just for ticket sales, but everything else along with that as well. And we know that it's undervalued. But the big question is, how much longer? Well, when you take a look at everything that's happening in the market right now, first we can see this. Look at the quarterly changes for the institutional ownership, all positive and adding. So take a look at what was happening pretty much throughout last year of 2024. Essentially, in a time where we're seeing media saying you should be selling AMC shares, in a time when we're seeing media saying that you should stay away from AMC shares, institutions, on the other hand, were actually doing the opposite. We even had, some big names like Renaissance, we obviously understand has an increase, a insane good return on their investment. So obviously they're making smart decisions here, and we're seeing some people obviously increasing their changes by over 1,890%, like you can see here. But essentially what we are looking at and what we are talking about is just how institutions sees the value of AMC, how they're willing to be buying. And remember, this was the time where AMC's fundamentals weren't as good and weren't as promising as where they are obviously going to 2025. Some of the things that we have to understand was that during the early quarters of 2024, AMC was obviously affected by the strike. That obviously had the impact. And now going into Q4, when we saw that the effect of the strike didn't have any impact anymore, you can see how good it improved. And now going into 2025, with all the movies that we talked about that are lining up, with the fact there are no, as yet so far, there are no factors such as the strike anymore to affect the box office, to affect AMC, we're obviously looking at an even better quarter. And if you want to kind of dive into the logistics of the company, this year, what is predicted is obviously the revenue increasing with everything that's happening, the box office, the sales, etc., etc. And with how we're obviously, like we talked about, with the saving up on energy, with the fact we're saving on interest, we're seeing the operational cost of AMC to also decrease as well. So the fundamentals this year will be on a whole new level in comparison to last year. So if people were willing to buy into AMC last year, just think about what they will do coming into this year. Now, another thing to talk about is obviously understanding Adam Aron's viewpoint. So yesterday we talked about what Adam Aron obviously said. And this is a tweet that he made in 2023. And again, I want to bring it back again right now because I think it's very important. So Adam Aron is the biggest retail investor. Now, a lot of people obviously questions in terms of some of the decisions he made. Now, we've also broke it down in the past before. And again, it is up to you to think whether it's good or bad for the company. Everyone has different perspectives. I understand that. But what I want to say, and is what, in my opinion, why I think obviously Adam Aron's decision, whether it's good or bad, I think he's making it in the interest of AMC for the price of AMC to go up. Yes, he can make decisions where he's obviously doing it out of, the interest of AMC, but it turns out to be bad. But that's entirely different from trying to make a bad decisions on purpose from the very beginning to obviously negatively impact the price of AMC. And when you can see here, it continues to astound and confound me that some out there hypothesize that I am not on the side of retail investors. I was say it over and over, I own or have an economic interest in millions of AMC shares and 8 units. I am a retail shareholder. Of course, I am on your side. This is something that he said in 2023, but again, he said it back recently as well in 2025, where he's obviously the largest retail investors. And like I said, this is why I believe all the decisions he makes are obviously in the interest of AMC. But again, no one is perfect, so sometimes there will be times where he obviously makes a bad decision, but like I said, he's not doing it from the very beginning to obviously to try and purposely make a bad decision just so that the price of AMC can go down. These are obviously two very different things. Now, another thing you can see, GME jumped to #1 holding for XRT as of yesterday. So new record and digging. Now, this is a fund that we talked about in the past, where we are seeing how they use it as a way of shorting GME, as a way of course, locating shares of GME as well. And this is something that we've seen in the past. One thing to note is that there are multiple ETFs that contains AMC, that contains GME, and they're with one sole purpose, which is obviously a way of shorting and locating shares of both AMC and GME. Now, with everything that we talked about with GME recently, we've seen so many orders come through. We've seen the price glitches like we talked about in our video yesterday at $1,400. You know, we are seeing the SEC not giving FTD data on GME. There are so many things happening right now for GME. And so the fact it jumped to #1 on XRT, it's obviously giving us some sort of indications that something is definitely happening. And that's very important to understand, because this is obviously reflecting on how they want to short AMC, on how they are trying to find shares of AMC, GME, so that they can bring it down. And remember, GME and AMC both have the same short sellers. So whilst right now we're seeing, you know, this is happening for GME, it doesn't mean that nothing is happening for AMC, because what we have to understand is that these guys are, when they do get squeezed out of GME, they will also squeeze AMC as well. And again, like I said, the vice versa works as well. And so that's very important to understand, is why we're paying attention to this. Now, another thing in terms of about why they're obviously concerned, why we're seeing all of this happening, is that leaves the hedge funds with hyper leveraged positions. At the end of 2023, hedge funds were exposed to over $550 billion in treasury trades, backed by just $10 billion of their own cash, according to the Federal Reserve. So this is, again, another reason why everyone should be concerned about the US debt. But I think it's very simple to understand this. In 2023, they were already exposed to over $550 billion in treasury trades. Now, this isn't even including the derivative positions that we've covered in the past. This is just the treasury trades. And what's even more important is the fact it was only backed by $10 billion. So you can see the scale of things. Remember, this isn't, we're not talking about 550,000 or even 550 million. We're talking about $550 billion that's of course involved, and only 10 billion that's backing it up. And now the same situation is obviously applicable to almost every part, not just the treasury, but when you take a look at just the short positions they took on, you know, the stock equities that we talked about in the past, maybe potentially in commodities, you know, everything that's obviously involved. We know that they are all over leveraged, and this was only in 2023. Now going into 2025, like where we are right now, of course the situation is only going to get bigger. And one thing to note is that the liquidity, whereas previously is 10 billion, it's very likely that the number that we're seeing here has only gotten bigger. So the 550 billion that they were exposed to has only gotten bigger. But the even more worrying part is that what they had in terms of backing with 10 billion has actually gotten smaller. And the reason is very clear. And that's because of what we talked about with how all the liquidity is obviously flowing out of the market. You know, when you see that they're constantly trying to spoof, when you're seeing that UBS is obviously doing these things, when you're seeing that we have companies like JP Morgan who's misreporting shares, obviously for their own benefit, when you're seeing the reverse repo to be at $185 billion, all of these things are showing but one thing, that they are in a situation of distress, and it's very clear what the distress is: the lack of capital, the lack of liquidity. And so going back to what we talked about here in terms of understanding how, again, it's very likely the leverage positions has only gotten bigger. This in treasury trades, we could be looking at 700, 800. And of course, this isn't including, like we talked about, the short synthetics they have of AMC, of GME, of any others, you know, the derivative positions that we talked about in the past. And again, the more worrying factor is that the money that they have to back up these positions to actually, you know, use as margin to keep these positions alive has only gotten smaller because of the lack of liquidity, because of the market situation. But yeah, guys, thanks for watching. I'll catch you guys next time.